Folks, sorry, technical glitch, but we are live. Happy Sunday, and the topic of the evening is going to be an announcement out of OPEC where they're going to apparently cut another million barrels a day out of production. So, what we're looking at here is the opening price action of light sweet crude. That's Texas light sweet crude. And we hit a high in the opening action here only less than 3 minutes ago of $75.06 the barrel. And we closed out at around, let's call it $72 the barrel on Friday. So a big move up high here. The question is this, is do we hold these gains? Because we came out with jobs data on Friday that was obscene, but I predicted it on Thursday night. I said, watch out. They're going to come out with a headline beat on the jobs numbers because that's what they do. Ever since Biden got into office, they just continually beat on non-farm payrolls. The only problem is that 78% of those jobs were in leisure and hospitality, low-paying jobs. We lost manufacturing jobs. So this brings us back to this, which is oil. Oil has been under pressure in the past several months because of economic weakness here in the United States and globally. So if oil cannot hold these gains here, it's a major contrarian indicator, and it'll allow you to decide whether or not that's a sign that we have a healthy economy or one that is in a lot of trouble. So opening price action this evening on crude up. It appears to be holding some gains here. We are certainly off the highs, but we'll revisit it. What we'll do is we will do this, set up an alert. Do we take out the highs? Our first alert of the week is for crude oil prices. Higher high or no. Let's set up another alert. Crude oil, lower low. And the markets are going to tell us, because I always do that. Because if we fail to hold these gains on this is the second cut, another cut of 1 million barrels out of production per day, warning flag on the track for this market. This is what I always forget to do. Not always, but always when I'm live. Always when I'm live, I forget to do that, and I get humiliated in public. Let's go to comments. Let's say hello to people. All right, we have on Sean, the man, the mission. Sean, hello to you, sir. Dan, thanks for the comments. I appreciate it. On YouTube. Corey, hello to you. Danny, how are you, sir? Franklin, the man, the mission, the champion. Frank, I hope you enjoyed your weekend and you are recharged. Yeah, I'm feeling a lot better, man. I mean, whatever I had, I still have a little bit, but it really rocked my world, man. I had COVID, but COVID I was down for like 2 days. This has been on me for like a week now. Paul, hello, sir. TZ Burton, hello. OG1, hello. What's up, buddy? I have calls on NVDS July. Let me write it down. My trusty handy dandy notepad here never fails me. My Bic ballpoint pen. NVDS. Okay, we got you. Talon, I got your message. I was serious about Dove. I think it's Dove. It's a really good grease fighter for a lot of different purposes besides dishwasher. I know it's dishwashing detergent, but it's pretty good stuff. M2 money supply continues to fall. We're going to be talking about that. Hey, Larry, we're going to be talking about that. Great point. That's going to segue into one of the major problems that is facing the market. Now, don't get me wrong. We're going to go over the chart of the S&P 500 in a few minutes. And if the S&P 500 does not continue up higher this week, I would be in shock. Same thing holds true for IWM. To a far lesser extent, the triple Qs. I think the triple Qs were very overbought. We saw sector rotation. Qs are now underperforming the NASDAQ as a whole. It did it on Thursday, did it on Friday. I think that's a trend that's going to pick up, and you're going to see a bit of a divergence. Qs sideways to down with the S&Ps and IWM leading the way higher, unless, of course, something like this, a black swan. This is not a black swan event. That's a little bit of hyperbolic. Let me retract that. Unless you get a news event as 10x as serious as what we're looking at right here, the market should continue up higher. The problem that for the market in the near future is what Larry is pointing to right now. M2 money supply. You're going to have Treasury going to the Treasury market and selling $1 trillion. That's going to be sucked out of the private sector. The banks, they're going to be buying up those treasuries. So what does that mean for liquidity in the markets? It's not good. It's not good. So buckle up over the course of the next month or two as Treasury goes to the markets and raises capital. Let's check in with the rest of the market in a moment. Trader Isaac. What happens first? Tesla at new highs or Biden cram filing? Tesla new highs. They pulled down that series of photos that were released off the laptop and the iPhone because they called it child pornography, distribution of child pornography. But this guy's not going to get indicted. Okay. That's some pretty scary stuff. If it's as alleged, I have no idea if those photos are photoshopped or anything, but if accurate, it appears as though some people should probably go to jail or at least be tried, fair trial. Is the T-bill auctioning going to hit the markets really hard? It's going to take liquidity out of the private sector, give it to the government to waste. And what does that do to inflation? Remember, it's the government that causes the inflation. It's government, their printing presses that causes the inflation. They're going to blame you. They're going to blame you. You have too much money. You are spending too much. You are eating protein. You're not eating enough bugs. It's all your fault, when in reality, it's them gaslighting you. Dan, I got you. NVIDIA. Tim. Yeah, it could be. I was pretty worn out. I was very busy in Europe for 17 days of really being on the go. We did a lot. We were recapping it last night. We did a lot. So, and I was doing recordings in the rain. I didn't spend much time inside. I sat outside in the rain at cafes. I was not going to miss out on that experience. So, at least the first week of being there, that's what I did. The rest of the time we were there, second week, beautiful weather, just stunning. Okay, oil holding gains here, coming off the lows. We're closer now to the highs than where we were. Let's check in with the dollar. The dollar is moving up higher. Slightly. Let's get a feel for how the euro is doing. Euro is looking weak. Unless this is a retest of a breakout point. This is a 15-minute chart. So we broke out here on Friday. Now we're doing a retest. If we fail to hold this support level, then we go lower. But we could just be doing a retest and we may shoot up higher here. So 50-50 bet. Let's check in with the yen. Yen is very, very weak. So here's the same chart, right? Similar chart, I should say. No breakout. It was a rejection at the resistance level And now we appear to be ready to break down to new lower lows. They're defending last Friday's lows on yen. Why is that important? Well, if the dollar corrects hard, you're going to want to be buying emerging markets, gold, silver, the miners. But the dollar surged on Friday due to the ridiculous jobs number. I think it's ridiculous. Okay, let's check in with what else do I have up here? We're on the topic of Forex. That leads us into precious metals. Outside reversal bar, 15-minute chart. They tried to take it down. Outside reversal bar here on gold. Interesting setup. RSI very oversold and hooking up now. Looks as though gold may catch a bid. It's down at current, just shy of a percentage point, but it looks like we're going to recover here, at least for a short-term pop up higher. So what the markets just told us is that down here at the 1962.40 level, there are buyers of the precious metal. Let's check in with silver. I did not prep these futures beforehand. My apologies. I thought it was SI. What is it? Damn. Bad host. Bad host. It was SI. So silver gapping down here, down about a quarter percentage point, but note that we are off the lows of the session. And it too is trying to rally back. Let's see whether or not we take out the final 15-minute candlestick from Friday. Okay. Sticking with agriculture, commodities. Corn ripped up higher last week. Ag just blew out last week. DBA was very, very strong. That's the agriculture ETF. Corn is down at current, but usually when we talk about ag, we talk about them on a weekly time frame to get a feel for what's the direction. And last week's price action was massive, and we broke out above the upper band of resistance. Is this last week or this week? No, this is last week. So 2 weeks ago, we had the breakout. This is last week. This is a retest. Corn is a buy. Last week, corn gave you a buy signal all day long. All day long. If you don't have a futures account, just simply type in symbol corn. That's the Tectrium family of ag funds for individual commodities. Soybeans, 2 week back-to-back up move, not as bullish as corn. Wheat, again, very similar to soybeans. Very powerful. I think that this is a potential buy signal here. We get a new higher high relative to 2 weeks ago. Then I would be a buyer of wheat, but I'm really, really liking corn. The one thing I would do, let's go back to that for a moment. We are a little bit overbought here. We need a pullback. On that pullback, I would be a buyer of corn. And members, we will be talking about it in the coming days. Let's take a look at equities. Let's begin with the NASDAQ. 15-minute chart. NASDAQ flat. Down slightly. Not much happening here at all. NASDAQ, in particular, excuse me, lingering cough. I apologize. The Qs are very, very overbought. You can argue NASDAQ overbought as well. Remember, you've had quite a bit of deviation, meaning you've had far fewer advancers leading the market up higher. The breadth of the market, I should say, it's a better way of saying it. The breadth of the market has been fairly narrow. It appears as though it's beginning to broaden out some. There's two ways to look at market breadth. Some people look at it and say, wow, the market's being led up by only a few stocks. When they peter out, the whole market's going to go lower. History does not teach us that. There are times in the past when you have equities, only a few equities leading the market up higher, that when they peter out, yes, the entire market does drop down. But that's, say, 60% of the time. The rest of the time, the 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 non-participants begin to broaden out because the triple Q names at current are very expensive, very, very expensive, as is the S&P 500 for that matter. But there's a lot of speculation now drifting into the market, and they are going to bid this market up higher, allowing for the growth stocks to now catch a bid and move the rest of the market up higher as the Q names begin to take a rest or even pull back. What could definitely curtail this rally is a black swan event. The lack of liquidity. You got to have liquidity that they plan on pulling out, and it's an open book test here. Everybody knows this is coming. It's not a surprise. It's not really a black swan event. Liquidity will be leaving the markets as the Treasury builds up its coffers, and then as it spends it, well, money goes back out, and liquidity finds its way back into the equity markets. Yeah, so you can see this already. The Nasdaq is down, or what you're looking at is the Nasdaq 100. So the triple Qs, so they're down slightly, but the E-minis, the S&P 500, are doing twice as good as the triple Q names at current. So that really feeds into my argument that I think that the Qs are ready to pause with a bias possibly to the downside because they're very overbought, whereas the S&P 500 looks like we're going to get a continuation move up higher into the new trading week. And the charts are indicating that. Taking a look at the small caps, they're on a tear. The small caps are up nearly a quarter basis point. Very, very powerful move. They're very overbought. I mean, RSI on a 15-minute time frame is at 85 and a half. Very overbought intraday. I think that you need to look for a supply zone above, and quite possibly tomorrow, if this rally continues into tomorrow, at some point in time, you're going to hit a supply zone above, and the Russell 2000, which is looking extremely bullish, you're going to be able to scalp for short. Let's take a look at the mid caps. Mid caps, very powerful move here. RSI not as great as with the small caps, but you're getting there. RSI on the precipice of an 80 handle. Nice move up higher here. Pre-market up spot 19%. Look at that. It just popped. Look at that. This is going to pull back soon. We're going to get a reversal here in a few minutes. Let's take a look at the small caps for a moment because they're even more overbought. I'm sure they caught a bit as well. We're flagging out here. This is going to get resolved higher, I believe. Let me throw an alert up here. Let's see if we get a breakout on the small caps. One minute time frame. What the hell did I do there? Oh, it broke out. Talk about timing, huh? So yeah, so look at the money coming in here on the small caps. RSI at current. They're going to do a retest now of the breakout point. Watch, they're going to take this down. They're going to tap this support level. This is what you call OCD trading, obsessive compulsive disorder trading. A breakout. Got to know whether or not this is support or will it fail. It's going to come back down and we'll be told that this is now a support level, and then they will take it up higher. Note how they're just gracefully tapping it. Talk about my OCD. At or above. All right, let's move on. What else did we miss here? Did we miss anything? Dollar we went over. Let's take a look at yields. Yields are up slightly. Not much to talk about. Let's get off of one minute chart. Yields not doing much. Vol. Let's check in with volatility. Volatility is rising. You have the S&P 500, which is up. Let's go to the big chart. So here's the VIX. All right, so let's go back to the small caps really quick. 1 minute chart. Yeah, so there was the retest. Wow, it didn't even hold, and they still took it up. So now we have 15-minute chart, RSI 86. We're going to get a pullback here fairly soon on the Russell, but I think that we're going to probably hit around 1850 first and then probably get a reversal. So back to the VIX. So we have the VIX up, but we also have the S&P 500 up and breaking out. What's the NASDAQ doing? Is the NASDAQ still red? Yeah, and it's gotten worse. Interesting setup here tonight, folks. We have the VIX up along with the S&P 500. My guess is we're at multi-year lows since 2021. We're at historical lows, multi-year lows on the VIX. And I think the probable cause is NASDAQ being overbought. These have been the leaders, and now they're beginning to lighten up. You can see we're weakening up here on the NASDAQ, and traders may be buying up insurance, betting that if the Q names were the leaders on the way up, if they begin to fail here, it may hurt confidence to take the rest of the market down with it. So I think that may be what we're seeing, besides the fact that we're about to get $1 trillion of liquidity taken out of the private sector. All right, so that's that. We killed this dead horse. Okay, so we just went over the Q names. What I want to point out as we proceed into the new trading week is this: that this upcoming week, is up, and this is as per TrendSpider. They put out a tweet. I usually go by this bar here. They're saying this bar here represents next week, and it's up only 30% of the time over the past 10 years. So be very, very careful going into the new trading week with the Qs. And if you take a look at the S&P 500, it's up only 30% of the times as well. So seasonality for this current week is not looking good. That being said, price matters, and the price action on the S&P 500 week over week is looking really, really good. We had a breakout the week of May the 15th, and we've been moving up higher ever since. Are we a bit extended? Yeah, we could go up higher. You could easily go up higher from here. However, you take a look at the Qs, there's not much room here to the upside. I think that we can head up to around 368, and you're going to see a lot of supply up there, and that could be when we get into some trouble. That being said, over the past few weeks, volume has been rising, supporting this move up higher in the Qs. Moving on. These are some tweets that I thought interesting, and what you're seeing is a lot of comparisons to where we are at current, and this tweet has to do with that, at current to where we were back in 2008, and the expectation is that we're going to follow through to the downside, that this is a bear market rally, which I tend to agree with, because I see no fundamental reason whatsoever for this market to be moving up higher, with the exception of the fact that there's maybe and probably going to be a Federal Reserve that does not raise in June for the first time in quite a while. Other than that, I don't see any reason in the world why this market should be sporting the valuation that it is at current. We're very, very expensive. We're going to go over PEs in a moment. But in short, if you were able to lay over, and I tried to find a tweet, if you go over to Michael Kramer's feed on Twitter, he has it where it's an overlay of where we are at current relative to the S&P 500 back in 2008. And I'll agree that the similarities are pretty eerie. But right now, I don't want to bet that we're going to see a collapse because the charts just look good at current, and we can only trade the market that we're given. That's it. That being said, did we add to shorts last week of the Qs? We did. Now, one of the arguments for why this market may have a very, very difficult time is this. And I actually quoted this retweet. This is the prime rate. This is what banks pay the Federal Reserve to borrow money and then lend it out to you and rob you blind. So where's my retweet? Basically, what my retweet was is the difference from back here in 2008 was that the debt at that point in time, the national debt was only $9.5 trillion. Today, it's 36 trillion and rising. So the interest payments on our debt are far beyond, have completely eclipsed times 10 not times 10, times at least 3 the size of our interest payments from back here. And again, you're going to see it in terms of the liquidity being sucked out of the private sector, going over to Treasury to do what? To pay interest on our debt, which is now the equivalent of the size of the military budget. And here, I said 36. I was inaccurate. We want to be correct here. We're nearing $31.5 trillion. My apologies. We have self-corrected, always fact check, always. So $31.5 trillion. I found this interesting, and this is one of the hazards to the market. I believe that there's a lot of criminality that's out there vis-a-vis our politicians, and this is published by the World Health Organization. Where did the flu go in 20 and 21? Somebody answer that question. I'm not giving an opinion. I want somebody to answer me this question. Riddle me that. Where did the flu go? And I'll leave it at that. Okay, so here, and this is just reinforcing what I said earlier, and I said it on Thursday night, but little did I know that I hit on a hot nerve with a lot of economists out there. $1 trillion treasury vacuum coming for Wall Street rally, S&P 500 QQQs. The U.S. Treasury is about to unleash a tsunami of new bonds to quickly refill its coffers. Correct. Post-deal supply. Post-deal meaning the debt ceiling surge will rumble through stocks and credit. We'll see. Already eroded liquidity set to shrink to 1 trillion. JP Morgan. Shrink by. I knew that looked weird. Okay, shrink by. Wall Street is warning that markets aren't ready. They're not. They're certainly not ready. And what you're seeing is a spike in skew. Now, this is a indicator. Generally, not always, but generally when you get a spike in skew, right, this is more deals with out of the money call options, I believe. And when you take a look at past times with the skew, like back here, here's the S&P 500 overlaid. We had a big spike, and it didn't impact the S&P. It just continued up higher. However, as we saw subsequent spikes in the skew, then we began to roll over. So it's not a one and done, always. So we can continue up higher here. But as we begin to spike, pull back, spike up higher, then you got to watch for the S&P 500 and the triple Qs to begin to roll over. So this is just an indicator. It's not saying sell your equities. It's just saying, hey, psst, tapping you on the shoulder, watch out. You're seeing a spike in the indicators. That's a warning sign on the track. Now, what's going to keep this market going, let's see if this is updated. This is updates all the time. This is from the CME group. This is the probability of the Federal Reserve raising rates. And this bar here is the probability of them doing nothing. And that's at about 75%. And usually the Federal Reserve delivers on what the market expects. And the market expects right now no rate hike. And they've come out with a skip policy, meaning they're going to not pause. Oh, no, 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 no. They're not going to pause. They're still in rate hike mode. Don't you get relaxed. They are going to skip 1 to a dozen meetings, rate hikes, and they'll be cutting, sure enough. But we need an event. All right, let's take a look at the PE. Let's refresh this. Let's make sure it's up to date. I'm going to take some license here. I'm going to say we have a 30 handle on the PE ratio of the S&P 500, and it's going up higher. So, yeah, we're probably going to move up higher here on the S&P 500. Nobody's paying attention to valuations. They pay attention to valuations when the market is sinking. That's it. Otherwise, it doesn't matter. But this is another flag in conjunction with the skew. And also, you need to take a look at the VIX. The VIX is at the very lower band of a compression zone. So we've been here before. We've seen this before. We saw it back here in June of 2021. And we saw the wrath of God come out of that compression zone. And there was a lot of optimism back here. And all of a sudden, it only took a week. You saw a rip your face off rally for a couple of months on the VIX. Are we there yet? We're pretty close. I was listening to Peter Schiff earlier. I got to go back to that later on. Excuse me. Here's the deal on I'll leave this for you guys to read. We already went over this. There's no sense in touching it. Let's do some chart requests. I may have to cut out early if my chest keeps doing this. But I do want to do chart requests, but I do not want to break out into a coughing fit. So let me make sure everybody's taken care of. The lovely Jody joined us. Hi, Jody. Hit the like button. 28 watching, only 9 likes. Please like. Yes, please like. Thank you very much, Franklin. And thank you very much, Pete. Same deal there. Thank you very much. Now we have 12 likes. Please keep it going, folks. They renamed the Cerveza. Yeah, right. That's one way of looking at it. I asked the question. You answered it. Rivian? Okay, let's do this. NVDS. That's NVIDIA. Yes. There we go. Excuse me. Oh, I didn't even know this existed. So this is a leveraged ETF shorting NVIDIA. I kind of like it. For a quick trade, I would not stay long. But if you take a look at NVIDIA, you know, it's better to take a look at the chart in NVIDIA than this chart because this has got time decay and big volume last week on this. So this was up, and did NVIDIA close up? I know the semis closed down on the week. NVIDIA closed down as well. I think you'd easily see a retrace on NVIDIA back down to support here at around 361, if not a retrace back. And for full disclosure, we have a position on NVIDIA. We have a strangle on NVIDIA. We're up 24% on it. We just opened it up last week. Doing pretty well. 14-day free trial offer. Just saying. We could see a retrace all the way back down to 341. So, and we were down on volume last week as well on NVIDIA. I think the time to have shorted this was on strength when it was tapping into, on the daily chart, the third standard deviation Bollinger Band. Now what you need to hope for on this one is that you'll see a double top and then a break to lower lows. But if we break 377, step number one, next stop is going to be at 365. Then after that, 353. Then after that, 342 per share. And we'll see whether or not we bounce from there. But NVIDIA is setting up for a bearish bet here. Yeah, but I think the best risk-reward entry point for this was right back here on this reversal day. So a little bit more risk now than last week. Tesla. Folks, we're using TrendSpy to automated technical analysis. Use the link below, 35% discount code. Tesla broke out last week. You do have a resistance level above several of them. The first at 222 spot 36. And then after that, I'd be looking for resistance at around, right at the tops of these volume shelves, at around 238 per share. Let's overlay monthly support and resistance. Do we have anything? We have the 21 period monthly moving average immediately above. So this 222 mark on Tesla is probably going to be a bit of a bear to get through because you got monthly moving averages above. Volume was good last week. You have 3 consecutive weeks of rising up volume, but only one of those was at or above the moving average. RSI looking very strong here, but a little bit of resistance immediately above. I'll be looking to sell puts here rather than just buying the common into a resistance zone. And if you're not familiar with what selling puts is, if you're a seller, it's a bullish bet, not a bearish bet. If you're a buyer, that's a bearish bet. Rivian, RIVN. These Chinese stocks, I believe Rivian's a Chinese stock, isn't it? The Chinese stocks are setting up nicely. As a matter of fact, I was reading this on IBD just prior to going live. How do I get rid of this? And I'm not a buyer of Chinese stocks because I don't trust them. But a lot of these Chinese stocks are setting up very, very nicely. Or am I thinking about NetEase? So let's go back. But the headline here, this is the reason why I went over. Top 5 stocks to buy and watch. EV Giant, BYD back in buy zone. So we'll check out that stock in a moment as well. I want to take a look. But Rivian, building a base, multi-week base. They tried to break it out last week. It was rejected. I think you could sell puts on here. What kind of premiums are there? NASDAQ now was positive a second ago off of its lows. You're not going to get great premium on selling puts, but if you want the shares put to you, it's respectable premium. Now, as a speculation, a pure cash flow strategy where you don't want the stock, I wouldn't make the trade. But if you want the stock and you're sitting in a congestion area, this is a great way to reduce your basis cost, generate cash flow rather than just buying the shares. I just drew my own trend line here. In fact, my opinion just changed. It looks as though we did break out. We had a breakout 2 weeks ago. Last week was a retest. So you could still do selling of puts or combo. Sell some puts, buy some common. And it looks as though we could move up higher here on Rivian. So next resistance level, I would imagine, is going to be at around $20 a share on Rivian. So I think that this is going to move up higher. Let's take a look at a daily chart. Yeah, they tried to break it out on a daily time frame on Friday. There was a rejection. So again, if you don't feel comfortable buying the common, sell the puts. We have AI for OG Tim. AI. And we have Kelly. Welcome, Kelly. It's always good to see another female. We love Jody, but we have far too few females on the show. And that is unacceptable. You're welcome, Jody. Okay, let's do we have Kelly up here. We'll do Kelly first, ladies first. We're always gentlemen here. Get off the daily chart for a moment. I don't follow this stock all too much, so I don't know what it's been doing. All right, so it's been consolidating. It's been dead money for a year now, more than that. Now, here's your tightening wedge formation. It's typical of what you see in the stock that's been in a bear market. This was $140 stock at one point. Wow. Let's go to a weekly view. All right. So what we're looking at is a stock that is putting in higher lows, weekly time frame. I don't know whether or not I would buy this here. I certainly wouldn't short it. You have good support right down at that 35.76 mark. Me, I take a look at this and automatically I'm thinking I want to sell premium. Not much premium at all. Current IV percentile is only 6%. You're not going to get much. We're at a 40 handle. You sell a 39 put. Not bad. Going out to the 23rd, you could sell a put if you want to buy the shares. If you want to go out further, 37.50s, you could get 59 cents on the premium going out 12 days. So that would be my way of trading this. You have good support. I like that 39 strike. 38 strike would be better. They have 50-cent increments on these options. I would take advantage of that. I like the options market here. The markets look okay. They're pretty tight bid ask spreads. So this is interesting to me. Were I bullish on the stock, yet not loving the candlestick? I don't like the candlestick. The only reason why I'm hedging here and looking for other strategies. We saw a reversal at resistance last week, and I'll show you exactly. Let me illustrate what I'm trying to explain. What we're going up into is a rising or an ascending wedge formation. That's not the best of formations for me. Can it break out? Can it move up higher? Absolutely. But more often than not, I see these types of formations get resolved to the downside. So would I be a buyer here? Probably not. I'm risk adverse. Did we close above this volume shelf? Yeah, we didn't. This $40.81 mark is a bit of a struggle area for Roblox. So the other way to play, if you don't want to sell premium here, is simply do this. Sit on your hands. Don't do anything. Set up an alert. Wait for the breakout above this resistance area and start nibbling. And I say nibble because you have one resistance level here at $40.81. Then you have more above at $43 per share. So to me, I'm going to keep going back to that strategy of selling premium. Selling premium, reduce your basis cost at a lower price. If assigned to you, great. You got the shares at a discount rather than paying up now. So were I you and you're not going to follow that strategy of selling premium, I would nibble on the breakout at $40.81, add more on a close above $43 per share, complete your buying on a close above $46 per share, because then not all, a lot of the overhead supply is out of the way. And you have more room to run up here on RBLX. Daily view. You had a reversal day on Friday. So you had the market up strong on Friday, yet this stock reversed. I don't know that there was news out. Volume was below average. So it doesn't appear to be a news event, but it wasn't performing with the market. And it's a laggard. So that's why I would rather see you go with selling premium. Reduce your basis cost, a bit more of a conservative strategy. You got it. Okay, TZ Burton. My wife is in the same room with me. Does that count? Man. You're a lucky man. You're a lucky man. Ask her to hit the like button too, okay? Robert. Hello, Robert. Another Robert. With the debt ceiling sucking out $1 trillion in liquidity, is now the time to short NVIDIA. Yeah, I am. I'm kind of a I'm kind of a bear on NVIDIA, not the business model. Technically speaking, I think that NVIDIA has come too far, too fast, and it's going to correct. I think the same thing holds true for the triple Qs. I think it doesn't necessarily have to happen on the Qs anyway this coming week, but it could. S&P 500, 50-50. Probably 60-40 in favor of bulls going into this next week. So, and the semis were down as a whole last week as well. So just be really, really careful shorting the video. Stay small. That's the only thing that we can really control in this market is the size of our position. Stay small. And don't stick around too long to the short side. Make your money and get out. So, yeah, I think NVIDIA is a good short, to be honest with you. 1/3 breakout, up 2/3 down. Okay. You are very welcome, Kelly. Okay. I think let's check back in with the futures action. I want to see if the NASDAQ turned green. And if so, did it hold it? We know it already turned green, but is there a rejection above? Yeah, there's no follow through on the NASDAQ. This is the NASDAQ 100, not the comp. This is not the NASDAQ comp. It's basically the triple Qs. Russell still up. Wow, now flirting with a 0.5 percentage point move. Still very overbought. RSI, we're having a bit of a divergence here. RSI has now broken support on the 15-minute chart of the Russell 2000. We're very extended on stochastic. I think we're going to get a correction here overnight. And if they don't correct it overnight and they keep this momentum going into the morning, and they open the Russell 2000 up strong in the morning, I think you could see a pretty hard rejection at the open. So I would not chase this market up higher tomorrow morning. We're very, very overbought intraday on the Russell 2000. Let's check in with the E-minis. They've already pulled back a little bit. And no, we are nowhere near as extended. It looks like they're going to set up for a continuation rally here on the large cap names. Let's check in with the mid caps. Mid caps, I'm getting the vibe of a bit of a melt up here. Yeah, light volume melt up. I think that these are going to pull back as well, along with the Russell. So large caps looking good overnight going into the morning. If they allow the mid caps and the small caps in particular to maintain this momentum into the close, into the open tomorrow, you're probably going to get a reversal, probably be a two-sided market tomorrow. Doesn't mean we're going to close down on the small caps, but it'll probably mean we're going to get a volatile session. So with that, folks, I'm going to say, unless there's any other requests. Yeah, Larry. Yeah, you got it. I'm glad I looked. EQT. Oh, this is oh no, it's a different chart. I thought that this is Equine's Pipeline Partners Royalty Trust. Oh, midstream. Yeah, midstream. We broke out on the day. I don't want to start with the daily chart. Bit of an overhead supply here. I like the chart. As a matter of fact, Let's do one of these. So trend is positive. You have good support immediately below at 34.37. You saw a breakout on a daily chart, but you have resistance immediately above. I would keep it simple, Larry. I would just set up an alert immediately above. And if we get the breakout, I'd be a buyer. I would set the alert and forget about it. If it doesn't fire off, I wouldn't get involved with it. Unless, of course, it pulled down to do a retest. And this is entirely possible for it to pull back. We'll keep some sensitivity on. I'll share this chart out with you. Have a great night, everyone. Jody, I see, Dan, Pete, Tim, Bob. My computer crashed for a second. Did you get a chance to go over AI? Oh, I don't think I did. I did not. I'm glad you reminded me. I wrote it down too. All right. So you have a multi-week consolidation at that $20 per share mark up and into, let's call it $31 per share. They attempted to break out of that range last week, only to get rejected, and a big failure here on the chart on volumes. So you had some institutional selling at that price point. Now, I don't know if it's ever been here before, and it has. So it IPO'd back here, December of 2020. It's been a meltdown ever since. So you have a lot of people with a lot of stock to sell because they can now sell that stock, I believe. And you have a lot of overhead supply above. Because a lot of these people have no cost basis. They're just options. And they could sell those shares now. So we had broken out in May. That was rejected. We're back down below support. I think the only thing to do here is really to wait until you get a successful close above this resistance level at 36.53. Now, I don't know what the markets look like for the options on AI. I would imagine they should have some premium in there. What the markets look like, how tight the range is, I'm not quite sure. But we'll take a look because a better play here, given all of the support levels we have below, you got one right back here. You got one right here. You know, if you can get some decent premium, you may want to consider, if you're looking to open up a long trade, consider selling puts and reduce your basis cost. So sorry about that noise. I hate it myself. AI. You got some decent premium in here. You got a current IV percentile rank of 47. So you can get some fairly decent premium on these options. So we like the 25. Let's see what the 25 strike looks like. Going out 12 days. I would throw a bid in at the 25 strike if you only want to go out 12 days. 55 cents, that's the midpoint. That's not a bad little piece of premium. And if the shares are put to you, they're put to you. If they're not put to you, you made 55 cents per share, per contract, I should say. So that would be the way I would trade this. I would not buy the common right now, given the rejection that we saw last week. Now, might they be setting this up for a breakout? Maybe, but you got to wait for the breakout, right? We can't buy it now on the hope of a breakout. You got to buy the breakout. But if it fails to hold $30.46, it's probably going to move a little bit lower. You have more support down here at 27.77. Consider selling premium. That would be my trade on this one. You are very, very welcome, Tim. And with that, folks, please like, subscribe, and everybody have an awesome night, profitable trading week. Don't forget TrendSpider, 35% discount code below. I give it away free to our silver and gold level members. All links below. Go check it out.